Success is just a matter of luck. Ask any failure. Earl Wilson. My friends, our success here is 10 to 15 minutes a day. We make it each and every day, studying these charts, learning the nuances, day in and day out. That's what it takes. Every day, it's not an hour on Sunday or 2 hours on Saturday or 30 minutes here and there during the week. It's 10 to 15 minutes a day after the market closes, studying what's going on, learning how these charts work, understanding price movement, which it moves in flows of fear and greed. That's a very easy way to think about it. And you see it reflected in weekly vertical crossovers. That's when you have enough fear. That is what drives the market down, like during the COVID crash. And then once the crash had occurred and we had the weekly vertical crossover going back up, of course, it went up for many, many weeks after it went down for many, many weeks. The weekly vertical crossovers are what's so very important. Where are we today? Stocks are mixed. The S&P is down. The NASDAQ 100 is up. Not a lot of movement. Again, tomorrow, of course, in the States, or if you're listening to this on Thursday, you know, if you're in the States, it's Thanksgiving. Shortened market hours on Friday. Stock market closes at 1, bond market at 2, but it will be open, and we will be tracking it for you. And we see that bonds for the day are down. Gold is down a little bit. Again, going to Thanksgiving holiday, not a lot going on. A lot of people already on vacation, but we'll jump in and see what's happening. S&P 500 down 0.20. Now we look, what is the chart doing? We had that weekly vertical crossover back on the week ending Friday the 13th of November. This last week we had a slowdown in that movement. That was where we got the red open box candle as opposed to this week's green, which shows us some continued up movement, a higher high at 363.81 compared to 362.78, about $1 difference. But again, it is a bit higher. Price percent oscillator pulling away from the red signal line. Derivative oscillator gaining upward momentum. Go to the 2-day chart. Now remember that prior 2-day candle ended on Monday. This latest one ended on Wednesday, and it did reach a higher high from the prior open box green candle back on the 17th. That high was 262.78. This high 263.81. So we are a little higher. Price percent oscillator had been flat, kicked up some. Derivative oscillator still losing upward momentum. Half-day chart, just see here. Well, you know what? We can check that out. When we look over, we can see that exactly the same. Price percent oscillator and the exponential moving average 8 line on the far left-hand side of the screen, second box from the bottom, we can see that they are exactly the same. So technically didn't have a crossover, just sort of stalled up there. So we'll continue to watch, see what there is to see here, what there is to learn. These markets may just be hitting a top. Who knows? Still, you have the Trump campaign, of course, that's out there fighting to try to overturn what we're being told in the media. Is that what the market's looking at? Waiting to see what happens there? How bloody it gets? I don't know. Not sure, but we're waiting for something to get figured out. And you know what? We don't have to know what it is. We just have to be ready, willing, and able to follow these charts. Now, the NASDAQ 100, unlike the S&P that was down for the day, a little bit, 0.20. NASDAQ up for the day, 0.61%. But look at it again. You see the same kind of thing. It had popped up on the week ending Friday the 13th, slowed down the next week, trying to move up, but again, the high 296.94 to 99.14. So again, we've not hit a higher high. Consequently, price percent oscillators flat, derivative oscillators still negative, losing downward momentum. Look at the 2-day, trying to pull away a little bit from the red signal line. Long wick on the top of a green open box candle, and we see that the open box candle has a little bit of downward movement on it also. We're going to use this now that the candle's closed as an opportunity to redraw our trend line and to try to connect three. Can't really connect three candles, but again, that's where we are on the 2-day. What do we see on the half day? It crossed over in the morning, a little further up in the afternoon. So again, we don't have a practice trade at this point on the NASDAQ 100 because the weekly is still confirmed down. So we'll continue to watch, let these things shake out. My friends, don't be upset if you're not getting signals. That means you are to wait. It's very easy. You are to wait, and you wait until the market gives you the signal, whether it's up or down. And you know what I'm going to put into the training today? You'll see at the top right of your screen as we go through this day's training, I'm going to put in there how to make money when markets crash, inverse funds. I want you to take that training. If you haven't had it before, you will get a great deal out of it. Inverse funds, how to make money in your practice trades when markets crash. That's something important to learn because if you add just a little bit of sophistication, don't forget all the funds we follow have inverse funds. The gold one, not very liquid. We don't really use that. We prefer to practice trade options on gold. And you want the best options training on the internet, the best options training period, it's ours. 3-part series, Options Made Simple, available at any of our 3 support levels for our Patreon members. Treat yourself. Get yourself our book. Get yourself the Patreon membership, and don't forget, beginning of December, that first Wednesday, 12:30 Eastern Standard Time here in the States, live question and answer call-in session for our Patreon members. If you have stocks, ETFs you'd like us to look at, help you track for practice trading, and questions you have, specific questions about what you're just not quite getting, that's what the Patreon live call-in is all about for our special friends. Now, let's move on to bonds. Bonds were down for the day, trying to move up a little bit. We can see we're going into the second week of a green open box candle, but again, things stalling on bonds too. Look, not reaching a higher high. Price percent oscillator actually heading down. It had been heading up. Derivative oscillator still negative. That's on the weekly chart. 2-day, again, crossed over back on the 17th, heading up for 4 more days, and then this latest down. Everything just sort of died. Again, price percent oscillator moving more flat, derivative oscillator flat. We go from the 2-day to the half-day, crossed over going down in the morning, and then further down, the big down move was in the afternoon. Not a big down move, just down 0.31%, sitting right there on the 2-day trend line. So that's where we are with bonds. Again, market's trying to figure out what it's going to do. And again, in this uncertain environment, we're going to let it figure out what it's going to do. It'll give us a clear signal what it's doing. And when it does, that's what we do. We ride the trend. Now, we leave bonds, go to gold. Gold down for the day, just a little bit, 0.05. Pretty much flat. We look at the week, though. Big down week, big red down candle. Long wick on the bottom, price percent oscillator spiking over, going down, derivative oscillator gaining downward momentum. 2-day chart, big red down candle, price of course well below the weekly, well below the 2-day. Again, derivative oscillator and price percent oscillator gaining downward momentum. And we can see where we hit our low, and that was back on Tuesday morning. And what things have sort of done is stay right around there since then. So we'll continue to watch and see just where gold is going to go. I'm ready for this market to get settled out and for gold to zoom and perhaps stocks go down. But we're just going to have to wait and see what happens. People keep saying gold's going to go to $15,000 an ounce. Well, of course, it looked like it was right about the time everybody said to buy gold, and that was about early August. That's when gold died. Since then, it's been moving down. This is what you get when you can read a stock chart. You know when to buy and when to sell. And my friends, That's what it's all about. That's the super secret. I am all for fundamental analysis, but don't be a dumb buyer. Don't buy at the wrong time. Use technical analysis, that is charting, to be smart about your buying. Hey, great training for you today. It is on one of the most important things that you need to know when you are thinking about stocks and ETFs and how to use these charts, and it is complexity. Not allowing complexity to creep into what you're doing, making sure that your decision tree is simple. John of Occam, a Franciscan friar in jolly old England many hundreds of years ago, came up with Occam's razor, his principle, which was that which is simplest as far as decision making goes, or as far as just complication, period. Those things that are more simple tend to be more effective and more longer lasting. That is why we have honed everything down in our method to keep it as simple as possible, as Einstein said, but not simpler. God bless, my friends. Hope you have a great Thanksgiving to all of our friends in the states, to everyone else around the world. God bless you and your family. All the best from the whole team at Charting Wealth World Headquarters.